Hello everyone. Welcome to another episode of Money with Kalu, Money Spaces, where we talk about personal finance, the economy, and of course, investing, right? We do this every Saturday, 8 p.m. West African time. And it's just a way for us to meet, talk about what we're doing in investing generally, right? So I usually have a guest and we talk about a specific topic, but it's always really open mic. So you can actually ask any question that comes to your mind and we can try to learn together and all that. So this week I had a story in my book, right? Someone asked me last week and I said that it would be good to bring an app that I use to track my sales. So I have the guest today is Osage from Yochaa. Osage, just say hi. Then I can go back and give my opening, and then we can just take questions, and then we can ask folks to join in. If you want to ask a question as usual, you can request or DM, and I'll just add you. Osage, hi, say hi, and then we'll go for it.
Hello, everyone. Thank you so much for taking time to join this session. I'm Osage from Yochaa.
Excellent. Yeah. So, Osage, let me just lay out the background to this and why this is pretty important to me. So, when I started to trade, when I started to buy shares or to invest, I was doing this before when I just left secondary school, even before I entered university. Someone gave me money, like I went home for Christmas, and some guy gave us a lot of money. I had to give him money during Christmas, and I had it with me, and I watched this movie called Wall Street, right? And in that movie, I saw this guy, his name was Gordon Gekko, and he was just dressed nice. He was talking with confidence. He was just, like he was all over the place. I did not understand what the guy was doing. What I knew was that he was buying and selling shares. And I wanted to do it too. I wanted to get into that whole shares, buy, make money, all that kind of stuff. So I know, long story short, I talk about it in my book, Let's Talk About Your Money, right? It's right there in the abstract. I remember going to First Bank to buy shares. And I wanted to buy First Bank shares because I saw the First Bank shares was 50 kobo shares at 3 naira 25 kobo. So I assumed that if you go to First Bank, I could buy it cheaper and I could sell it to my friends, maybe like 3 naira, and make money off it. That's what I assumed. I had no clue, right? So I went and they taught me essentially how to buy shares and all. And that's how I got into that whole buying shares and being, Osage, you might want to mute, right? And I got into that whole idea of buying shares and essentially being an investor that is today. I knew nothing about investing. I knew nothing about how to pick a stock, nothing. I basically bought the First Bank shares when Standard Chartered was leaving, about 325 kobo. And I think I also bought Nestle. Now, back then, there was no internet. There were not even computers. I had to go build a computer. I paid someone to build me a computer. There was no internet. So if I wanted to find out about share price, you had to go to your stockbroker, then pick that daily price list that they published, and you go through it, you do a copy, you take it home, and then you can then update your portfolio. So I would go to Marina like once in 2 weeks, get a copy of the latest share price, come back home, and then I had bought this bootlegged version of Microsoft Money. So Microsoft Money allowed you to what you have like Robinhood now or Passfolio now. So you can actually get that app, and I could then update the prices. So everything I learned very, very early about shares was via that dealing with Microsoft Money. What I did notice was that whenever I bought the share price, it would give me a share historical price. But once I plug in my bonus, if I get a bonus and I tell the computer I've gotten a bonus, it would reduce my cost. It would reduce the average cost of what I paid for it. If I put in the dividend and I use the dividend to buy more shares and I tell the computer I've done that, it would reduce also my average cost. So I figured out pretty quickly that, listen, the way to make money is to just buy the share and reinvest, what we now call compound your investment by just buying more. That was like a light bulb for me. So you hold the shares, then you buy, then when they pay you dividends and bonuses, you reinvest. And then that average cost that I bought, the price I paid the broker maybe a year ago is no longer the real price, because every time I reinvest my bonus, it's coming down in price. Remember, I wasn't even invested then. So this was like learning for me. And it basically showed me even till today how I invest, how I look for dividends, how I look for return on investment. And that guided me, right, essentially to what I am today. So right now in the world, there are many apps that do all what I've talked about. Many apps will update automatically. Many apps will allow you to select and buy shares and all that. why I particularly like Yochaa, why I invited Osage to come talk to us was this feature that they have, this way you can actually track what you have bought on other apps and then bring it into your Yochaa app and then to use it, right? So for me, I use Robinhood, I use Passfolio, I use a ton of apps. And I buy US stocks, I buy Nigerian stocks. But you can't mix them all, right? On Robinhood, you can't put your Nigerian stock. On Passfolio, for instance, you might want to put all of them, but where do you put the other like fixed income that I'm buying and all? So Yochaa allows me to put everything all in one place, right? I could just put the Nigerian, put the US stocks there, and I can get my average cost just in one place, which is very, very convenient and also lets me track my trade so I can know my return on investment. Osage, I mean, that's why I like it, and that's why I basically brought you in. So, Osage, let me just get to know you, just for the folks to know you. Maybe a one sentence or so introduction to who you are, what is Yochaa all about, what issues you guys want to solve.
Okay, thank you so much. Thanks everyone for listening in, and thank you, Kari, for that beautiful story. It shows just how far we've come invested. So my name is Osage. I'm the creator of Yochaa mobile app, and it's an application we created. Basically, the backstory of Yochaa is that around 2012, I started investing in Nigerian stocks. At that time, there were no mobile applications for doing that. And the way it worked is you have a brokerage firm, you have to send an email for them to buy your stocks, and then everything had to be done through an online portal. So if you just wanted to quickly check what your portfolio was worth, you have to log in on the computer, and it wasn't convenient. And luckily for me, what I do day to day is I write mobile applications. I have worked in finance, and I realized that it was something that is a very useful tool I could build for myself. So the whole idea was actually to create what Carlos was talking about, to create something very simple where you can just manually enter all your shares and the price at which you bought it. And every time you go in there without logging in, it's a mobile app. So every time you get in the app, you immediately know what your returns are, what you gain, and then if you get dividends, you reinvest it or enter the amount and how much stocks you can buy. So this is the basic background of Yochaa. So we started with this very feature, and over time we've added a few other features, which I think in the course of this conversation we'll talk about.
Excellent. Yeah, I like that. Like you said, just that tracking. Remember, like I use multiple apps. I buy on many apps. Even Yochaa allows me to buy, but I like the way I can put my US and Nigerian in one place, and I can track my portfolio and get my ROI in one place. I think that for me is the key for me. Let me go into the app. I did some screenshots, right? Osage up, and I just picked what I liked. So I just mentioned, maybe we can just walk us through it, right? So I like the search feature. And hi Obi just in. So Obi helps us. She's a co-host. She helps us to do the back end. She post stuff. If you want to speak or send a DM, send it to Obi and all that. She's right there. She helps us and all that. So Obi, I just shared the search part, right? Osage, the part I like about is how you make it green and red. So visually, if I look at the search portion of the Yochaa app, I can see the stocks that are doing well, and it's color coded. Deep green meaning deep profit, and of course red meaning deep loss. So I can just look at it just visually, and I can see what's happening in the market. I like that because no one really has time nowadays. If I'm in a car, I can just take on my phone. If everything is red, wow, that's a problem, right? So that's a pretty cool feature on the search guide.
Yes, thank you. So we created a heat map.
Yeah.
Again, for the reason you've explained, right? So that it's easy to quickly see what's happening. So on that search page, you have like on the top, you have 4 tabs. One of them for the top 100 US stocks. So these are the biggest companies in the US. And then the second tab is all Nigerian stocks. So you tap on it and you immediately see the entire Nigerian stock market.
Yeah.
All the listed stocks here. And you can, there's a tab below that where you can also change from today or 1 week or 1 month or year to date or 1 year. So you tap on 1 year, for instance, you can immediately see the biggest losers in the last 1 year. And then you can also quickly sort out betting. Now, of course, you don't want to always see only 100 stocks a day in the
Yeah.
market. So there's a favorites tab as well that can allow you select up to 30 different companies you're interested in. So that's what most people actually would use. So you just have your 30 companies and you'll be able to see everything on one screen. So you tap on it, and if it's red, it's not a good day for the market. But then you can also go and look at 1 year and say, okay, maybe it's all red today because it's a bad day, but looking at the last 1 year, I made a lot of gains. So, and then on top of that, you could just type the name of any US or Nigerian company, and it brings it out for you as well.
Yeah, and I mean, I think I'm just going to share it. I'm just going to share this app just so people can follow. I mean, what's the pronunciation? I see it here spelled at Yochaa. I call it Yochaa. Am I getting it right?
It's perfectly correct.
Okay.
That's the correct pronunciation.
And I'm just sharing. I mean, I like the heat map, especially for Nigeria. So I like that because visually you can also go if you are a trader guy or you just want to see how your stocks are doing. It allows you just quickly, boom, you are there and then you know what's going on. So I do like that part. The second part I like of Sage is the analyze. This is where I think the Nigerian market has to step up a lot, right? In the analyzing part, right? If I want to buy, say, Microsoft, I can know exactly what Microsoft paid for the last 20 years, their return on equity, any data, who has bought Microsoft shares, the directors that have bought, I can find out everything about Microsoft. Very, very difficult to find out about Nigerian stocks. But I see that you're trying to do that with the analyze section where I see you put the stocks and you have the 1 year, year to date, the 1 year, 3 month performance year to date. Very, very important, right? For folks to know that. So if I want to buy MTN, for instance, I can go back and look at what MTN has done the last year. I can look at the returns and all that. I like that. The part I like specifically is that dividend part, when you can track the dividends that they have paid and when the dividends are going to be paid. So if I want to buy for the dividends, I know when to get in, possibly to also get out. So that analyze part also, I also like it. If you can talk about that, I would appreciate it.
Okay. Yeah, so for the analyze, so once you tap on any of the tabs on the heat map, it takes you to a detailed screen where we start with basic chart. So we provided charts for the last 10 years for all US and Nigerian stocks.
Yes.
And when you swipe your hand on the chart, you can see how the prices have gone.
Yeah.
And then you can zoom from 10 years down to 5 years, 1 year, or year to date. Besides that, we have the performance history. This is a very quick way. We've gotten a lot of feedback on that users like it.
Yeah.
It gives you, okay, over the last 5 years, over the last 3 years, what the return is. And that's where you see, for Nigerian stocks, you see very huge numbers there. Like I'm looking at Weber Bank now, 570% for the last 5 years, which is quite a healthy return, right? And then the dividend section, that just captures dividends paid. What we've done with the dividend yield for Nigerian stocks, just to make it a bit easy to scale, because we're trying to rank all the best dividend paid stocks. And the problem faced is the way dividend yield would typically be calculated. The standard way is the price, the dividend divided by
the price,
the current share price.
Yeah.
Now, for the Nigerian stock, and we've stated that just to avoid any confusion, what we have there is we divide by the price at the time the dividend was paid.
Okay.
So you're getting the yield at that time. For the US stocks, it's the standard way because you don't get a crazy 15% dividend with US stocks.
Yeah.
Like that. So with US stocks, we just do it the standard way. Whatever the dividend was divided by the current share price. But we included a wrap there just so that you can quickly see the best dividend paid stocks. There's a feature where we actually have a heat map for dividends as well. It's outside the scope of this conversation, but what we wanted to do, because it's something a lot of people just miss out. The yield in a lot of Nigerian stocks, right, is so high. And you can actually, like Carl said at the beginning, right, you can just by reinvesting your dividends, be getting about 8 to 10%. And if you compound that, it's quite a healthy return, especially when you have the price appreciating as well. So besides dividends yield, valid. We just don't have the data for
A
a
lot
lot of
of,
companies.
yeah. So,
Yeah.
so I
In
mean,
Nigeria, so it's
yeah, I mean,
Sorry, go ahead.
no, it's fine. Sorry to interrupt you. I do like that it's pictorial. So, like say, Wema Bank, if I look at Wema Bank, I see the graphs, I can see the net sales, I can do quarterly, annually. I like that. Let me talk about dividend yield, maybe just for folks that might not be that into investing. So, when you want to compare shares with, say, bonds and we say fixed deposit, they're all different kind of investing, yeah? So, you just can't take shares and compare with, say, a bond or a bank deposit. But the way you do it, right, is to take the yield of, say, Zenith Bank or Wema Bank, and you want to compare that yield with the risk-free rate in the economy. So what's the risk-free rate? The risk-free rate is the safest investment in the economy. So in Nigeria, the safest investment are the investment by the Nigerian government, which are your treasury bills if you're investing for 91 days, and of course, bonds if you're investing for more than 1 year. So how will this work? Let's say you want to invest for 2 years. Let's say you've paid your rent, you have this money, you know you're going to use it in 2 years, right? You want your money back in 2 years, no stories asked. So you want to invest that money to work for you, right? Let's just assume. And you want to compare a stock that pays a good dividend or a bond that pays a good dividend. How do you compare both of them? The way to do it is to, first of all, number one, you look at the risk-free rate in the economy. That's your benchmark. So you say, okay, 2 years. What's the Nigerian government's 2-year return on the bonds? That's the return that you're going to get. Risk-free, no wahala. You get that rate. If that rate is 10%, that means you cannot invest or should not invest in any investment paying you less than 10. Inflation is there. Yes, you look at inflation, but you can't invest in inflation. You can only invest in assets that you can put money in, right? So you get the risk-free rate, you get that number, right? Then you now start to compare that number with, say, the dividend yield of, say, Zenith or Wema Bank. So if Wema Bank is paying you 7% and the risk-free rate is 10%, you don't do 7%, right? Because you can get 10% without risk in the federal government. That's what you compare. Dividend yield across the board. If a bond for the government is paying you 10% and a private bond is paying you 8%, you don't invest in the private bond because the government bond is paying you more at lower volatility or risk. So dividend yield allows you to pick a particular stock that you like. If you pick Zenith, look at that dividend yield and say, wow, if I invest, then I'm going to get this dividend yield. But remember, dividend yields are in the past. So what you're looking at is what the company has declared in the past. It means that for the coming year, they have to declare a new dividend and it's not guaranteed, right? So, but it allows you to compare like for like those separate investment classes, which is why I like that what you've done here, Osage, with the analyze and understand part where we are looking at, you give us the numbers. So number one, I can look at the market snapshot with the heat map. That's the first chart we've showed. I think Obi has helped us with that. You can look at the market as a snapshot and say the market is green, which means it's going up, or the market is red, which means it's going down. Those two things mean different things to different people, right? If I want to buy, I want the market to go down. I want to buy the cheaper price. If I'm in the market, I want the market to keep on going up because I'm there. Then next, if I want to look at the fundamentals of that company, what are the sales? What are the revenues? What are the dividend yield? And I can do that with that analyze and part of the Yochaa app. So do you want to add anything to what I've said, Osage, before we move on?
No, I think you've captured it all. And like you said, for dividends, what I do with Nigerian stocks personally is you're right that it's in the past.
Yeah.
In a lot of cases, when you see the history, that's why we provide the history. So in Yochaa, we provide the history for the last 9 years of dividends. So you see some companies are consistent, especially like the utilities. And so that would be one thing I look at. I look at the ones that have consistently paid. And the thing that I see with dividend investment is that it's just a bit less headache. Like I'm not too worried about fluctuations in prices. If I know that they've consistently paid dividends over the last 9 years, then it's more likely, of course, it's not guaranteed, but it's more likely that you get that little pay. And reinvesting it for me is key. you reinvest it, and that's when you start getting the effect of compounding.
I mean, we can't talk enough about reinvesting your dividends. If you simply get your shares, let's say you bought MTN shares, and MTN, I mean, that company is crazy, right? We bought their shares in December and they paid us dividends in January. I've never seen that before. But if you get those dividends and you don't reinvest it, you haven't compounded it. You have to go and reinvest it to then get that benefit of compounding. Just keep that in mind, guys. If you don't reinvest, you haven't compounded. And I like the fact that with this app, really, you can actually see 10 years dividend yield going back, and you can actually then say, okay, I know what they paid 10 years ago. I am going to now try to see, or I can possibly take a guess as what they'll do tomorrow. And in the US, they have what they call dividend kings. These are companies that have been paying dividends for like forever, and not only paying, but increasing their dividends as inflation has gone up. There are a few companies like I think Procter and Gamble, I think Coca-Cola, those companies that Warren Buffett buys. If you notice, he loves dividends. The man doesn't pay dividends, though, but he loves to receive dividends. That's very, very a good way to track dividends. Also, on that tip, in Nigeria, if you want to buy dividend stocks, if you go to the Nigerian stock market, they have all those indexes. Look for the PFA index, because in Nigeria, the PFAs can only buy shares in companies that pay dividends. So that index is tracking companies that the PFAs can buy shares in. And these are essentially companies that pay a dividend. So that's like a cheat sheet for you to know, okay, which companies are paying dividends and which ones can I buy. So that's just your cheat sheet. I love dividends. They're like an insurance policy. You get income back as well, and it's all good for you. Okay, so Otsagi, let's go to the one I really like about this app, really. And I think that's the tracker. Like I said, the tracker is the one I really want to talk about. What the tracker does, is to take what you have bought everywhere. Like I said, I use almost four apps. I use Yochaa, I use Passfolio, I use Robinhood and all that. But when I buy on these different apps, some I buy in the US, some I buy in Nigeria, I want a place I can see them all in one. So I can calculate my return on investment on my portfolio, not on the individual stocks, but on my portfolio. This is why I like this, because I can bring them in as a tracker and I can load them in. But I like what you guys have done here, just like my Microsoft Money, right? I can now add bonuses. I add my bonuses at the zero price. What it then does is it automatically goes to my portfolio and it reduces the average cost in my portfolio, which then allows my portfolio to post a better return on investment. So, Osage, just walk me through this and see if I've missed anything out. This is one I do like and I use a lot. Yeah.
You haven't. So just to add to what you said, with the tracker, it allows you. The only restriction, I use restriction in quotes, is that you can't mix like Nigerian and US stocks in the same portfolio because of complications with the exchange rate. So the app allows you to have 3 independent trackers. So if you've added a US stock to one, then you just keep adding US stocks. If it's a Nigerian stock, you keep adding Nigerian stocks. And the drive for us, so we only increased it to 3 trackers, I think 2 months ago or last month. And the reason for that is that we've noticed that there's a lot of appetite now for investing in Nigeria. And a lot of people would have different apps. So imagine you have a Trove account, you have a Tracker account, you have Bamboo, and you have stocks in all those places. You can't track all of them in any of those apps. But with Yochaa, you can just manually enter it. You do it once, right? Manually enter it once. And you can have all the stocks. So you can have all your US stocks in one tracker, all your Nigerian stocks in another tracker, and then the 10th tracker you can just use for speculative monitoring. So maybe you want to try things you haven't bought, you can use that for the 10th. So another thing we have with the tracker is that you can cycle through the different parameters. So you can check the percentage of each stock in your portfolio. So it gives you a holding percent for every stock you have. You can tap a button, it shows you your return on investment And then the feature that Kali really likes is it shows you your current cost and the average price that you paid for all the shares. So you might, so this is where you see that, okay, the average for my stock is quite low compared to what it is now. And it's only low because I've invested a lot of dividends.
Important point. Yeah, very important point. And I like the way you explain it now. So there are 3 envelopes. I can use one envelope for my US stock. So my Robinhood goes into one envelope. Then all my Nigerian goes into the other envelope. So if I use Robinhood, I use Passfolio. I put them in my US or my dollar tracker. So it's their dollar tracker. Then all my Nigerian guys, I use Chaka, I use Cowrie, I use Pi and Trove. I put them in the second one, and in the third one I can customize it. I like that way. So because what I used to do was to just assume an exchange rate and change the dollar one to Naira or change the Naira to dollar. But I like this way. This way I can track it via currency. And I also like the part about individual return that you've spoken about. It is very important. There was a tweet I saw a long time ago, and it was big. It was trending, right? This lady or this person has said that they bought Access Bank in 2007 for, I believe the amount was 23,000 Naira or so. And then the person sold those Access Bank shares in 2022 for about the same amount, about the same 20,000 Naira. So of course, the point being that there was no return, that she invested 23,000 years ago, 2007, and that she then sold the same shares in 2022 for the same 22,000. But what they didn't take, that tweet was substantively misleading, because what they didn't take into account was that when you have held those shares, I pulled up the entire dividends that Access Bank has paid from 2007 till 2020. In some years, Access Bank was paying 8%, 9%, 10% higher than Nigerian inflation. They didn't take those dividends into account. Access Bank also paid a bonus, I believe it's 1 for 10 during that period. They also didn't take those into account. So if you don't take that into account, she's only using the historical cost to analyze that portfolio. And because it's only historical, then once you compare historical to the current price, you'll always be at a loss. But if you compound by reinvesting your bonuses and your dividends, you drive your average price down, which means that if you compare your average price now to the current price, your return on investment is higher. So if you're not doing the right things, you're getting the wrong number on your portfolio. That's why apps like this and most apps that track this information for you are very important. You can't use Naira and a pen pad or just Excel sheet. You have got to change, or the system has got to take into account that reinvestment of your dividends and your bonuses to adjust the average price downwards as you compound. Very, very important point. I can't say that enough, how important it is. I learned this before I knew anything about investment, because I bought the Microsoft Money app that did that. So I just saw it, that's what it was doing. Later on, when I understood investing, I understood that it was compounding that app was doing, right? So Sagi, that's what you're talking about. I do like when I want to stress that we have to make sure that we are compounding correctly. Otherwise, you might say, wow, this is a loss, and you go sell. But that portfolio is actually making a profit. So, yeah. Sagi, I had a guy here, he's dropped out. I asked him to hold on, but he's dropped out. But let me just take Jamad. Jamad, how are you doing? You can unmute and say hi and just tell us know what you think so far about our discussion. What's going on, sir? Hey, Jamal, how are you doing? You want to go ahead and speak? All right, so let's just move on. So, Osage, that's essentially why I particularly like it, because without that, I'm just going back to the average costing. Without tracking your average costing, your portfolio might not be giving you the correct return on investment. So, guys, please make sure you have something that you're doing. If you a guy sent me a DM over the week that he does his on Excel sheet. he knew what he was doing, he would take the Excel sheet and adjust. That's perfectly fine. But if you can do it easier, do it easier. But don't use your historical cost or the price that you bought the shares. That's not your real price, especially if you are reinvesting. That's not your real price. Make sure you adjust that out. So, but also, just a quick one for you. In terms of regulation, right? Are you guys regulated? Do you have a SEC license? What's that relationship, just for our listeners?
Yeah. So at the moment, you can trade Nigerian stocks on Yochaa, and we have a brokerage partner, Cardinal Securities. So they're the ones who basically hold the funds, and they're the ones who execute the trades. So Yochaa is a portal that interacts with those systems, but because we have that partnership with them, we don't hold any of the funds. They are the regulated party. So just to summarize, the current state is that we have a partnership with Cardinal Securities, who is regulated by SEC.
Okay, so Cardinal Stone, of course, is the one that buys, holds, custody, and all that. So that's essentially, okay, that's great to hear.
That's correct. Yeah.
Great. So this is the other part I like apart from the tracker, this connect part, the connect you guys have on the app. So connect is like what you described it as what's up for investors, right? So you can go in many times. There's this concept in finance, also in statistics, that when people agree on a topic, if people agree on a topic, it tends to be the average and it tends to be, should we say, correct. If I ask 100 people how tall a tree is, the average tends to be correct. That's a concept in I don't know the exact term in statistics, right? Same thing in investing. If people, investing is a funny topic. If people believe that a stock is going to go up in price, they will buy that stock and the stock will go up in price, especially now. So fundamentals are always struggling to catch up with investors. Example is the guys in Wall Street bets. Those guys are buying quote unquote rubbish. But because they are buying it, the share price has to go up. I give an example. They were buying Hertz. Hertz was a bankrupt company, but the share price was going up for a bankrupt company worth zero. But if you don't buy Hertz, you're going to lose money. And guys were buying, and guys made a lot of money, and Hertz was able to then go back into the market and get a new ownership. Same thing with AMC. Same thing with what's the popular one, the software that sells GameStop. GameStop and AMC, those two companies, when they were shorted, technically they were dead. I mean, GameStop is a company that is selling games, but in physical stores. How many people listening to my voice have gone into a physical store to buy a game? Everybody buys games online. So GameStop itself was a dying company. But Wall Street bet guys grabbed it, and because they were buying the shares of GameStop, the price was going up. You can argue that they have no fundamentals, but the price is going up. End of story, right? So I like forum boards. As a matter of fact, right now in Wall Street, they now track what Wall Street Bet says. They want to know the sentiment on the street with those quote unquote kids. What are they saying? Because if you take a decision and Wall Street Bets does not like your decision, you're going to lose money. A hedge fund, Melvin Capital, this is a hedge fund, has gone out of business, and their main stake last year was they were the guys that shorted GameStop. And Wall Street Bet guys said, it ain't happening. And Melvin Capital has now gone out of business because they can no longer short. If you short, Wall Street Bet guys come there and buy it up. So forums are very, very important for you to gauge. Remember, the word is to gauge what the street sentiment is. So I like this connect thing that you guys have here, right? The connect part of it, where you can go in and see other folks and hear what people are saying. It gives you a sense of what's happening in the market. I like that a lot. Can you talk about that connect, the Yochaa Lounge, in more detail for us, please?
Sure. Yeah. So what triggered this? I couldn't agree more with you on what you just said. You can actually see it happening, playing out in the Nigerian market. Now, because there's so much interest now in investing in Nigerian and US stocks, what has the new ecosystem that has come up is that you have a lot of WhatsApp groups and Telegram groups where investors meet up. So again, using the big examples, Tracker has a very big group with about 5,000 or so users on Telegram. Bamboo has the same, but then you have lots of WhatsApp groups, and there's so much intelligence in all of these groups. Okay.
Yeah.
But the problem with these groups is that first, discovery is not automatic. Okay, there's no way you can find which WhatsApp group should I join now, except someone tells you about it and invites you. Okay, another problem is that all the intelligence captured there, sometimes it could be just tutorial, like maybe today you're telling people about investing in dividends and all of that. All that intelligence is trapped there, but these are platforms that were not created for financial conversations. So if you go to Telegram now, if you've been away for 3 days, you're going to come back and you're going to find like 20,000 messages. So much intelligence there is trapped. So what we tried to do here was, okay, why don't we build from ground up something that would give that ability to have real financial conversations, and it's easily discoverable. So if you go into Yochaa Lounge now, we have just 3 rooms for now, and it is built for financial conversation. So you can use your @ to refer to stock symbol, and then instead of having to go and take a screenshot and attach it from the chat, you can immediately go into the dividend screen, or you can immediately go into the stock details page. So that's what we've tried to do here, just to have a single place where investors can meet up, have conversations, and that intelligence is not lost. So if we wanted to have a conversation specifically on the topic, we can create a new chat group that will be active for maybe the period of that conversation, and then we'll archive it. So if you want to go back 2-3 months later to find out, okay, what was the conversation held about MTN at the end of 2021, you find it there, and the intelligence is not lost. So for us, the intent here was to create a place where investors can meet and discuss ideas, like you said, with Wall Street bets. But more than that, to have a way for all this knowledge to now have a repository where people can go back, consult it, and hopefully over time will be a place where people can just go and find out things, and the intelligence is not lost forever.
Brilliant. Can you touch more about how you can use the @ So if I want to talk about Zenith, I can say @Zenith and it pops up. Is that what you're saying?
Yes. Yeah. So if you're typing, maybe you just, again, it's structured very much like WhatsApp, but while you're having a conversation, you type the @, it will list out all the Nigerian stock symbols. If you type Z, it will bring out the ones with Z, and then when you eventually select the one you're interested in, it's a hyperlink within the text. So if someone is scrolling what's happening with Zenith Bank today, the moment you tap that hyperlink, it's going to show you the chart of Zenith Bank. It's going to show you the current price, and from there you can just seamlessly navigate from screen to screen. Something else we also have is if someone like you kind of was in the group and you had admin rights, and maybe you were talking about stock recommendations or suggestions, it is structured such that there will be a special tab for all those conversations on what you've analyzed, and people can just quickly go there and see what recommendations you've made and why you've made those recommendations, and from there have links to different resources you've highlighted. So we've created it so that it's just a more natural place for financial conversations, and over time we're going to add more tools that make it's just a bit more natural.
Gotcha. So quick DM for you, Osage. Someone's asking, is this like a normal app? If I want to pay, do I go to Cardinal Stone or do I pay to the app? Someone wants to find out. That's Deji. Wants to know if I want to buy shares, how does that work?
So the app has an interface for collecting payments, but those payments go to Cardinal Stone. So you don't have to make a payment to Cardinal Stone on maybe their website or anything. You make the payment in the app, but they hold the fund. So the fund, again, you have to go through KYC before the account is open. So all those documents go to them, and then they open the brokerage account. And then if you were to make a payment, like the payment is instantaneous after the account is active. You have virtual accounts, so you can make the card payments. It's shown in your wallet, but the funds are held by Stone, and all the brokerage transactions are managed by them. But because we've created an interface that makes all that easy, all that is transparent to you. So you make a deposit now, in 2 minutes you can see those funds in your wallet. You can make withdrawals. Withdrawals are immediate as well. But but the funding process is we've made quite a lot of effort to make it as painless as possible.
Gotcha. And the follow-up is asking that, so can I use this app without investing? If I just want to use this app to track, to be on the lounge, is it possible without actually buying and selling on it?
Oh yes, definitely. So most of our users, if you just to give a context, when we created it, we wanted it to be. It wasn't created as an investment app. It was mainly for information. So probably about 95% of our users are users of Drove, Yochaa, other platforms who don't actually trade on Yochaa. But because they like these tools, they come back and they have the conversations on the lounge. They use for tracking their stocks. So yes, quick answer to your question is, yeah, you can, if you want to view stocks for charts for all US stocks, any of it, over 6,000 US stocks, you can see all the charts. And it's far more detailed than what you find with any other app in Nigeria at the moment, because our focus has always been providing information and building a community of investors. So yeah, you don't need to have a brokerage account. In fact, you don't even need to have an account with Yochaa to use 80% of the features.
Gotcha.
So if you wanted to track, you need to create an email account, because we need to have a way to know your details in case you delete the app and reinstall it so you can retrieve your information back.
Okay, let us make just to reset the room again, guys. So we're talking investing, tracking your purchases, tracking your portfolio, because if you don't track your portfolio, you don't know if you're making a loss or a profit. You don't know how well each sector in your portfolio is doing. We're talking with Yochaa, or Sage from Yochaa apps. He's given us a lot of information here. It's really, like you said, most of your users are guys that come from the existing Nigerian apps you have, the Passphotos, the Chakas, the Bamboos, but lots of cool features on the Yochaa app that you can use even without being a paying member. So if you want to ask a question, you can send me a DM, send Obi, the co-host, a DM. If you want to speak, just go ahead and request. Either Obi or myself will add you, and then we can make you speak. And you can talk about anything investment, guys. And we always talk investments on Saturdays. I mean, it's just to close out the week and see what's going to happen in the week. Osaka, you personally, right? I know you are. Does this, where are you investing? Let me just ask you that question. Where do you think is good right now? If you were a guy, I mean, there's inflation happening, there's Russia happening. Where do you think is a good place for a guy to pack money nowadays?
Okay, first, the normal disclaimer is the by no means recommendation. So for me, so I'm based in the UK. I invest in the UK and the US markets and in Nigerian market. So my strategy is a bit of a simple one. I believe strongly in dividend reinvestment because it's less hassle, it's less headache. And so I just tend to look for companies that have relatively high dividend yields and are consistent, and I invest in them. Now, in the last few months, obviously, because the market I see it as an opportunity to invest in all a lot of companies that have basically gone down, but they still have very good value. Because it's almost like getting at the bargain, right? You don't buy when everyone is scared. So for me, right now, it's primarily tech stocks in the US, and then
interesting.
It's just the high yield stocks that I invest in the Nigerian market. And the Nigerian market, I feel a lot of people talk about how bad Nigeria is, but the truth is that I think personally, right, that the types of opportunities some cases, it's a bit like crypto gains. You have some really, really crazy gains. So I'm looking at Yochaa now. Year-to-date gain of some companies is like 300%.
Like which company?
You don't get. So like looking at Weber Bank right now, year-to-date gain is 300%.
Whoa.
And then Guinness is 123%. Academy is 140%. Now, like Academy, at the beginning of the year, I got Academy. It was a bit difficult to sell because it's not very liquid.
That's the thing. That's the thing. Yeah.
That's the problem with some of the low cap ones like Academy. But companies like Guinness, if you put a sell order, it happens immediately. Or Weber Bank or Presto. So it's only the ones like Academy. That said, I still got a return of about 150% on our Academy, and I eventually sold. So I don't. It's true that obviously the value of Naira is terrible and inflation, but then we are getting those types of returns, and you have companies paying 10% dividend yield.
Yeah.
You're investing it. It's better than just putting it in your savings.
Yeah, I was saying, wow, when you said you're buying the tech guys. So for you, are you buying, you're quote unquote buying the dip long term? You feel that tech stocks have been overbeaten, is that it?
Yes, because if you look at companies like Apple,
yeah,
I think Apple continues to deliver value, right? And they've shown that over and over again. But then the prices, the whole market has gone down. It's been a lot of panic selling.
Yeah.
So for me, I say like, and I think time in market is far more important. So when I buy
that's true.
Some of the stocks, it's just with the goal of, okay, it's not as if I want to sell it tomorrow. In another 2 years, this company just keep, if you look at the trajectory, it keeps going up, right?
Correct.
As long as you don't panic sell and you have that patience, eventually it goes up. So if you're buying now when it seems like a bargain, of course, by doing your due diligence, right? So it's not like, okay, let me just go and buy everything, put all my money in one place. There's also the goal of spreading the risk as well.
Yeah, you're right. I mean, I'm going to share the heat map for the US markets right now. I'm going to share the heat map, what's happening in the US markets for 2022. I'm going to share it just so the folks can follow the discussion. Let me just do that real quick. So when we're talking, we can see. But I mean, it's quote unquote a crazy market out there. If you look at what's going on with Apple is down 15%. Google is down 22%, Amazon down 30%, Tesla down 28%, Microsoft down 18%. As a matter of fact, all sectors in the world, apart from energy, are down for 2022. Not just tech, but everyone is down. It's a hard, great red market. So, I mean, you have to take the view, like you rightly said. What has been the performance over 10 years? I just tweeted that stuff over, guys. In the last 10 years, right, what sector has gone up and has beaten inflation? This is the US markets now. It's equities. So 10 years, the best performing asset class in the entire world by ETFs. If we look at ETF performance, that's the VTI, which is US equities. Then we have the VNX, is it VNX? US real estate. So over time, even if you look at from 1896 till date, go back 15 years to date, go back 30 years to date, US stock market, the trend is up. It's up, down, up, down, up, down, but it's higher highs, not lower lows in the long term. So I'm just saying, maybe is it like you're saying, is it a good time to pick up this stock if your objective is long term? You might be onto something. Again, it's not advice. But if I was a long-term guy, I don't care about the markets being down. I want the markets to be down so that I can buy a good stock at a discount to its intrinsic value. That's what I'm looking for. I want to buy a good stock at a discount to its intrinsic value. Not all dips are dips. Some are just real corrections to take into effect the fall in the earnings. But if it's dipping, I really want to get in. But I have a question for you, Osage, and I have Carl here. Carl, I'll take you next. But Osage, it's a good question here. Someone is asking, if I buy from you guys, what are the total costs? I mean, if you have that figure, i.e., what is regulatory? What are the fees to buy via the app? He says he's paying about 15%. 15% is high. S-man, 50% is too high. I mean, if we take away the regulatory, right? Yeah, that's high. I mean, either he's making an error or that's too high. Yeah, but do you have your own figure? Yeah. Do you have yours?
Okay. Yeah. So basically, it's about the brokerage fee is 1%.
Yeah, 1%.
But by the time you add all the VAT from SEC and the SEC fees, it comes to about 1.6.
Yeah.
1.7%. Yeah.
Yeah. So I mean, S-man, talk to your brokers. I mean, just 15% is crazy. I don't know what they're charging you.
I'm sure it's probably 1.5.
Yeah, he says 15%. He's asking me if 15% is high. I mean, S-man, send me a DM. Just reply. Is it 15% or 1.5? But I mean, the average will be below 2, right, and all that. But not fair enough. Maybe you missed out a dot on there, right? So yeah. So I've got Carl. Carl, how you doing? Thanks for waiting. Do you want to say a word? Go for it.
Hey guys, this is the first time I'm joining this class.
Really? First time? Welcome.
Yeah, it's first time. Yeah.
Thank you, sir.
But I think I started following Yochaa like a couple of months back.
How bad?
Yeah, so I saw it pop up and I'm like, let me just come on and see what's going on.
Great.
I think what this platform is kind of valuable because people are getting something out of it.
Yeah, excellent.
I grew up in Nigeria, I'm based in the US, so I started investing, I think 3 years ago, when the pandemic happened. That's when I started being, I used to be a passive investor, but when the pandemic happened, I went in and I started, focusing on what was happening because we all work, right? We always focus on work and make money, but we don't focus on what our money does for us, right? And we don't plan. We jump on stuff, the trending stuff, what is going on in the market, and if you invest that way, you're guaranteed to lose money. So I think it's a very value-based discussion going on, and it's we're an inflection point now where if you know what's going on in the world, you're going to make money. Not today, maybe 5-10 years from now. If you have that time horizon, long-term investing is still the key to grow. Yeah, so I think my 2 cents to what you guys are discussing is if you want to buy stock or you want to invest, like Osangi, from what you were saying, he's a value investor.
Yeah.
Okay. I can tell he's a value investor, he's going to dividends. And it's a very great way to do that because wealth is accumulated over time through compounding. Yeah. That's how major billionaires have done it. It doesn't matter whether you spend money or you create a business, your business will still need time to grow. Yeah. So that's the law of interest, right? Yeah. So if you want to invest, I think for me, I'm a growth investor, right?
Growth guys.
And see what's going on. Try to follow trend. I know what COVID did, right? If you look at what COVID did, COVID forced a lot of people to start learning how to use the internet.
Right. True.
When we started migrating to cloud, it's not primary anymore. So I believe cloud is going to be major in the future, and I believe healthcare is going to be huge. Because medicine is going to go from curing to preventing. Right?
Interesting. Yeah.
If there was a lot of preventive measure on ground, the world will not shut down in 2020.
True.
Right. So medicine is too physical. I think a lot of things are changing right now. And it's also a good opportunity for spending what is 1 hour a day in read and
Carl, you're breaking up a bit just now. You went to the Matrix. Carl, you're in the Matrix. You're in the Matrix.
I think let me drop and come back in.
Yeah, Carl. Super great comment. I was going to ask you your top 3 picks from the growth side. What top 3 opportunities out there you are looking at? Do you want to share that? It's not advice. Just want to take your pick. What are the 3 things you're looking at?
Man, look, this is very minutes from my anyways, okay?
No worries.
So number one on my list is Teledog, okay, the telemedicine platform. All right. So I believe.
Oh man, Matrix again. So I got Teledoc. Kyle, give me the other two before we lose you. I think we've lost Carl. He was able to drop Teledoc. I think we lost him. I think Carl works in the medical field, so that's very, very interesting. I know Teledoc. I think what they do is it's remote. What's the word now? Doctors can tell you go. They manage doctors' internet meeting rooms, so you can actually do consultations online or something like that. I think that's what they do. I'll Google it right now and share that out. Yeah, but I think Teledoc. Teledoc. Yeah. Yeah. I mean, what right now, guys? Think about this. The money that's going to be made when this recession is over. It's not a recession yet. I apologize. Not yet a recession. But the folks that are going to make money are the folks that are buying when the market is down. That's just the honest truth, right? If you buy Gala every day, do you want the price to go up or do you want the price to come down? You want the price to come down because you are a buyer. But if you are already in the market, you want that market to go up, right? That's the whole idea. That's what we're talking about. So that's just my sense of it, of what's going on. If you buy now, sorry, not advice. Let me caveat, not advice. It is not advice. Keep that in mind, please, not advice. But when you are buying at a down market, then you are essentially buying at the low price part of the market. And then you're then saying that when the market goes back up, you are at a good place, especially if you are buying a good company at a price below the intrinsic value. That's my caveat right there. Did you pull up Teledoc? Yeah, Yochaa, can you hear me?
Yeah.
I'll get it. But I have a question for you. So someone is asking on the Yochaa app, would I be able to move my crypto from to the Yochaa app for investment? So he's basically asking, do you guys do crypto in Yochaa? That's what he's asking.
No, we don't at this time.
Not at this time. So that's the answer for you right there. Okay, I have some other DMs coming through. So he said 1.5, that's the fee. Let me just try and read another DM. Okay, he's saying, so I can buy all Nigerian stocks. He's asking, I can buy all Nigerian stocks via Yochaa. Like I can buy the MTN and all that via Yochaa. That's what it's saying. Yeah, that is correct. Yeah. Okay, and what about bonds? I think that's what he's asking. He's asking if he can, I think this is his start. Can I buy savings bond, the federal government of Nigeria savings bond? That's what he's asking. Can he get that as well through you guys? You guys do fixed income or it's just equities?
It's just equities for now.
Just equities for now. Excellent. Good job. Yeah. Okay. All right. So, I mean, let me just take you back on what you talked about, that you are investing in tech, right? Is it because you know tech, or do you think tech is going to really go back to where it was pre-COVID? Right now, tech has lost all the gains from COVID. Everything is down. All the the Zooms and the Palintons are not just down; they are falling like a stone, right? But tech has lost all the COVID-19 gains. So, are you buying tech because you still feel that tech is there forever, or is that tech has an opportunity now as the price has gone down? Why are you still in tech?
So for me, it's because again, this is not advice, right? The way I always think tech, right, is that it drives a lot of, basically life today is driven by technology. You think about Apple, for instance. Even though I don't like to have regrets, but I remember like 2012, because I work in the tech industry, Apple particularly, when a friend was telling me to buy Apple in 2012, I'm like, oh, come on, man. It's not a real product. You need to be looking at oil and gas, and I thought it was a fad. But if you looked at what has happened over time, our lives depend on what it is. And it's not just Apple's health devices, but then there's also now advice which you could say, okay, there could be saturation. There are services and it's the type of value that I still don't fully understand, but somehow the world is still driven by it. If you look at a company like TikTok that has come out of nowhere, people just watching 15 seconds, 15 or 1 minute videos, a few seconds, but then a lot of the hours that people spend on these devices and the type of models for advertising, it's just completely new. And I just feel the surface is yet to be scratched. So that's the reason why I think technology plays a big role. Look at what happened during COVID. The world was running on tech, right?
Yeah.
So that's the reason why I have strong interest in this field.
Gotcha.
And because my view is usually long term, I know that eventually things will be fine. That's the way I look at it.
So you're a long-term guy, and for you, there's an opportunity for you to maybe average out your cost, right? That's what I hear you say.
Yeah, it's okay. Cost averaging.
Okay.
Yeah.
Great.
And to all the young people, just to quickly add this, to all the young people here, if you're in your 20s, I'll just tell you, don't overthink this thing. I wish someone told me about this when I was in my 20s, right? If you just have a regular way to put aside some money and just regularly invest with a long-term goal. If you think about it, this is how pensions work, right? How does the government afford to keep paying people who have stopped working? It's your money that they've kept away all this time. So it's just a very cool, the stock market and investing is a very cool way to build wealth.
Yeah.
You have the patience, you don't panic. Just keep putting something into it, reinvest the dividends. And at 45, you literally have $1 million.
I mean, also again, you're not saying it loud enough, right? I mean, people are listening to us that may be young. The biggest advantage you have is that time, like Osage is saying, it's time. Don't do this, don't waste your time, all this. I want to buy, sell, I want to let, just pick an amount, put that amount away every month. VTI, I mean, when I was starting, there was no VTI ETF. You couldn't buy a US mutual fund. You could only buy Nigerian stocks from Nigeria. Now you can sit in Taraba and buy Tesla. You can sit in Lagos and buy whatever. So you don't have any excuse. $20. You invest $20 in an ETF like the VTI. You have shares in 5,000 companies. Tesla, Microsoft, Alibaba, Berkshire Hathaway. So you really have no excuse, guys, to go out and invest. Take your money, save 5%, save 10%. You are a young guy, buy equities, reinvest your dividends, forget about it. Leave all this, market is going up, market is coming down. Leave it for 10 years. Just ignore it. ETF, low cost. I use VTI all the time because it's Vanguard. It's cheap. It's not sexy. It's boring investing. You put money in, you reinvest it, leave it alone for 10 years and come back. If I did this when I was growing up, I would have been richer than I am right now, right? Amen. But Osage, I have a question for you. Great question from a guy here. He's asking, right? Is there a way to track sales? If I buy, for instance, let's say Interbrew, and I sell it, is there a way for me to track the profit I made on that sale and in my portfolio? Microsoft, when they had it, if I bought and sold, it will tell me what I made on that sale and what my portfolio's return on investment, i.e. my purchases vis-a-vis my sales. It told me that. Do you guys have that?
Unfortunately not. It's something we've thought about. There are just some complexities in how to implement that. So it's something we have thought about, because one thing we try to do is to make, again, the app really, really simple to use. So like it's a bit of a trade-off, because the question that now comes is, okay, if it's been sold, you're now creating like an infinite time scale. Like, okay, I've sold it, the amount is there, and then the next thing is, am I going to buy something with some of that money? How much of it am I using to buy another stock? So again, it's a bit complicated. But sure that I'm sorry, we don't yet have that feature.
And he's going to follow up. He's asking about your referral program. He says he has referred close to 10 people to Yochaa and is wondering if you have plans to introduce referrals into the future. So good question there again on referrals. Do you guys have a referral plan for someone like him? What can he do? I know you have a 10, so maybe you can explain to him.
Yeah, we don't have a referral yet. It's something we're working on. I think the next version, probably to be released in July, should have a referral. So yeah, but thank you so much for recommending it to different people. If you drop us a chat in Intercom, we can talk more about about what types of ideas you have, because we like to hear directly from users as well. So within the app, we have in-app chat. This is not the lounge now. This is just Intercom for help desk support. So just drop us a line and say that you're the guy who recommended 10 people, and then we'll just see what we can do. But right now, we don't have a formal referral program.
So, Osage, I'm going to copy his mail and I'm going to send you a chat right now. But like you said, if you guys want to ask any questions or you have a technical question, please just send them a DM. But I've sent you the gentleman's contact via DM, so you can follow up with him maybe privately outside and then see what you do, right? So I have a question here. Okay, how does the one, wait, let me see. So he's asking basically, how can you trade to your chest? I can answer. So Stan, what we're saying is that Osage is explaining that you can actually have your own trading apps, or you can trade on Yochaa. But when you trade, you can go to the track it and then impute what you have bought on the Yochaa. And then it will then give you all those, your average costing, your performance for that particular trade tracker, right? Then your second question you are asking, is there a way I can set auto reinvestment of dividends on Yochaa? I think you should take that Osage. Do you have that feature for auto?
So this is one of the things that frustrate me the most about the Nigerian stock market.
Mm-hmm.
So the challenge we don't have that feature. Now the challenge is that the reinvestment should actually, there are a lot of parties that need to be in on it. So the way the Nigerian stock works right now is you have the registrars who are paying the dividends. So there's really no formal way to ask for dividends to be reinvested. Now you could have it in some apps that have custodian accounts. But of course, the difference is that with a custodian account, you don't really own the shares. So basically, you have maybe a big company is collecting a lot of funds from different people, and they're the ones buying the shares. But then in your portal, you can see how much shares you have from that big pot. So they can do dividend reinvestment. But if you have a normal brokerage account in Nigeria at the moment, there's no way, and this is something we're trying to work with our brokerage partners to see if they because that automatic investment is where the magic is. So the moment they pay you your dividend to your bank account, you now have the process of transferring it back to your brokerage account, and they now remember to buy. In a lot of cases, people just drop the dividend and then forget, and there's no reinvestment. This is for Nigerian stocks, by the way. So we don't have that, unfortunately, and we're handicapped because the system doesn't really support it yet.
You're right. And again, just to purchase what you said, I mean, one of the joys of investing in the US markets or in US apps, right, is like this dividend reinvesting. Because like you said, once you don't see the dividends and it just does it automatically in the background, it actually helps you. Sometimes I see a dividend, or the app I used to send me a dividend. Because you own this, we're going to pay you this dollar amount. I'm like, yes, I've got dollars. Then the next time they've already invested it, I'm like, damn, but I wanted to spend it, but they do it automatically. So I don't even see it. And my portfolio just keeps on growing. They have dividend reinvestment plans in companies in America, in the West, right? So they're called DRIPs. So you can sign up for a drip plan and the company will automatically buy you shares with your dividends. So these are things that I think Nigeria has to sort of implement. Easy way for folks to just get their dividends. So it now goes to the banks. But why can't you just go to the banks and then you can tell the bank, this is my app I want to use, and they can automatically buy it. I got my MTN dividends. I tried to do it. I actually called the guys and I said, this has been paid. Can you guys automatically buy them? Like, no, you have to take it, give us a check and do it. So unfortunately, Stan, we don't have that feature. It's a Nigerian systematic thing. It's not an app thing there. Then he's asking a third question. Anthony, that's going to be for you. He's asking, what about folks that bought Skybank and it's now Polaris? You can't sell your shares. Anything to do with shares, right? Go and go to the registrars. So if you bought a company or you hold a share for the bank and the bank has failed, it's no longer in existence, go to the registrars, take 2 forms of ID. They will give you the best way. Either they have converted your shares from Skybank to Polaris or whatever, but your registrars are going to be the best place for you to get any information ongoing on those. So thanks, Ben, for the comment. So Carl just came back and he said he was driving and all that. So let me give you his top picks, right? He picks Teledoc, then he picked Snowflake, interesting. Then he picked MongoDB. So I know Snowflake, I know Teledoc, I don't know MongoDB. I'm going to try to look at it in my track and see what's going on with that stuff. But those are his picks. Yeah, Mongo, let me look.
MongoDB, that's a database company, so that's a tech company.
Yeah, DB. Let me take a peek at what that guy is doing. It's down. I mean, the price is down. Let me look at what I always go straight and look at. What's the PE? Jesus H. The PE, the forward PE is 1,656. So this stock is seriously overvalued. What's the price right now? The market cap is 16 billion. Small company, tiny company. They pay no dividends. So if you're buying this company, you are basically buying this company to sell it tomorrow, right? You're buying to trade. No dividends paid. It's very expensive. But look at the earnings per share next year, looking at 140%. That's what they're estimating. Sales are up on this company. This is, I mean, it's down to 57%. Man, it's a play if you were a trader. That's what I would say. It's about $250 or so, I believe, the price. So if you're a trader, yeah, it's a play for you. But man, it's expensive. 1,656, which means at this price it's trading at 1,656 times its earnings. So if you bought this company and you didn't get any dividends, it will take you 1,600 years to get your money back. That's what the PE means, man. I mean, Kyle is a big boy. He can handle it. And then he was talking about Snowflake. Yeah, I think Snowflake was down. That was one of the companies that did very well during the pandemic. Let me see if I can pull it up. Snowflake. What's the ticker for it? Snowflake.
I think it's Snow.
SNOW. I see it.
Yeah.
So let's take a peek at Snowflake real quick. Again, the price is down 129. The forward PEs, these are expensive stocks. It's 342. So essentially, the price just went up, boom, and now it's coming back down. But it hasn't come down enough because, I mean, this is a tiny company, not a tiny company per se, 1.2 billion in sales. Market cap is just 42 billion, right? They don't pay a dividend. They don't pay any dividends, so they have no dividend yield. Earnings per share next year, 129. This year has been a bit rough for them. PE, like I said, 342. Price to book is $7.95. Compare the price to book at 7.95 to the actual market price. That gives you that huge premium that they're asking you to pay for the benefit of owning their stocks. Sales are up, we get that, but still, man, this is an expensive stock. So it's a trading play. If you're buying this, you're looking at it going up. Return on investment is -14. Return on equity is -13. Again, this looks like a play if you want to trade and you believe that the market will still reward this company with sales. That's the whole idea. This company has got to sell more for that price to stick. Quarter-to-quarter sales up 100%. So maybe that's what the market is looking at. Earnings per share up 35% quarter-to-quarter. But still, personally, for no dividend yields for tech stock, I would pass it for now. This is just me, and we're not giving advice, but this is just what I think, right? Did you pull it up? Did you have any take on this guy as well?
Yeah, I don't know as much as you do, but for the analysis you've given, with those types of P ratios, for me, it seems very scary. And I do know MongoDB because it's a tech company and it's relatively new. I know that they're getting quite a lot of growth, but then you're right that maybe there was a lot of excitement in the beginning, and that's probably why it's overpriced. And yeah.
I mean, it's high price. The market it's high growth, right? So the PE itself is we have to compare in that sector. In that sector, there are high PE stocks. So if you compare sector to sector, they are okay in that sector with having that high PE. So when you see these tech stocks, when the US Federal Reserve starts to raise rates, because these growth companies require capital to grow, then it starts to affect them. So if you discount their future earnings back to today, then of course, this is not really a dip. It's a correction of the price because rates are going higher. That's essentially what's happening with all these tech stocks. They are really extended and they really spend a lot of money. So US interest rates going up will have a negative effect on them. Not all, but on them. Look at a company like Microsoft. That company is, it's also in tech, but very diversified, where they make their money from, software, from products they're buying, Blizzard. So very, very diversified company, very, very well managed. So, I mean, I like that kind of tech company, right? I'm just pulling it up to look at the numbers, just so we can compare Microsoft. I think it's MSFT. Yeah, MSFT, that's Microsoft. Let's just look at Microsoft numbers, just so we can compare, we can get a sense of when we look at the PE and all that, right? So Microsoft forward PE is 25. You can compare to the 1,600. So the forward PE for Microsoft, 25. That's a bit, it's near where we are. Look at the sales for Microsoft, 192 billion. 192 billion. Microsoft pays a dividend, not a lot. They pay $2. The dividend yield is negligible, about 0.91%. But at least they pay something, right? Earnings per sales growth, this is where they now start to flutter, just 18% quarter to quarter, right? Earnings growth just 9% quarter to quarter. But look at their return on investments, 28%. Look at their return on equity, 47%. So you compare these numbers with the other guys that are also in tech, right? And you can argue, is Microsoft a tech growth or tech value? You can make that determination on your own. But that just tells you, when you compare even in that sector, you then get to see different numbers for different folks. Lastly, let us look at Apple, because Apple is the biggest company in America, biggest tech stock. Let's look at their numbers just to compare and to see where we are with those numbers. The forward PE for Apple, 22.81. So it's 22.81. Look at their sales. Get ready. 386 billion. 386 billion. And sales growth 8%, earnings growth 9%. But look at their return on investment. Are you sitting down? Or Sage, sit down. Are you sitting down? Their return on investment is 50% for Apple. The return on equity, 152%. Apple also pays a dividend. It's negligible at 0.61. But when you look at an Apple that has 152% return on equity, and it is still a massive company, right? With a forward PE of 22, you then wonder, why would I go buy a company that is growing that fast, has this high PE, pays no dividends, and has a negative return on equity? So the numbers then start to make, okay, maybe these guys were just overextended or they grew too fast during the COVID and now they're coming back. But I mean, Apple, Microsoft, yeah, these guys, I mean, look at what they're saying. They're saying, yeah.
Yeah, for me, those like companies like Apple and Microsoft, they're big, in one way they're like utility companies, right?
Yeah.
But then there's tech companies that are growing, especially Apple. Like I feel the type of ecosystem they have and the praise for their products, that just makes it, and like I said, they're expanding into other areas, right?
Yeah.
Other areas that will be new revenue streams that do not exist yet. Like they've done advertising and privacy. So for me, those are the types of companies that they have good growth, but they're also very stable. So that's why it's one of the companies I'm very much interested in.
I mean, Apple, if you drill down Apple to the fundamentals, Apple is selling phones. Apple is a phone company. That's what they do. They are selling phones. All that profit you see is phones. But what really Apple sells is that name Apple. So people look at Apple.
Yeah.
The phones from China, because Apple makes their phones in China. The phones that come from China are carbon copies of Apple's. But they cannot sell those phones from China at the price that Apple sells their phones. Because people are paying premium to own an Apple. People physically line up when a new Apple phone comes out. They line up outside Apple offices to buy an Apple. It's the same exact phone you can get from China at 10% of the price. But nobody's going to go and buy that Chinese phone. They want to buy an Apple phone. So Apple is selling that name. Yeah, that name Apple. I mean, Apple brought out, what's that in a tracker, a pod tracker last year.
The margins of those things are like...
Jesus, I bought that pod tracker online for about $10. But Apple comes out, is selling that stuff for like $50, and they are making more money selling that pod from that many companies are making, right? So if Apple brings out Apple cutlery, Apple spoon, fork, and knife, they'll sell it for maybe $25, and people are going to buy it. I'm using an Apple fork at home, and they're going to make a lot of sales. That's what Apple does, So they build that brand so that whatever they don't invent anything. Go online and Google. Apple doesn't really invent anything. They didn't invent the phone or the iPad or the i whatever, but they make it better. They market it. It's seamless, and they put it in this ecosystem. And they've also understood that we have a platform. So if you want to sell on our platform, you pay us. Look at the lawsuit that they're having with the folks that make the video games. You're on their video games. Even if you have secondary sales, Apple wants 30%. You can argue if it's, yeah. So, I mean, you sell, but they want 30%. So, yeah, I mean, I hope there's no one waiting to. I've been looking at numbers too much. Obi, thanks for hanging in there to call us to order if we get too deep into investments. Yeah. Yeah. So Oshin says Tim Cook is a great salesman. I agree with you. PE was over 1,000 before, now less than 100. Let's look at Tesla. So Oshin is talking about Tesla. Oshin, let's take a look at Tesla. I mean, Tesla is another company that I wanted to buy, but I saw the PE a long time ago at 1,000. I said, man, really? 1,000? But I like Tim. I like Elon. I like what they're doing, but it was so expensive. Let's look at Tesla. Oh my God. Forward PE is just 47. This company stock has really come down. So the forward PE is now just 47. I could be tempted, right? Let's look at their sales numbers. Sales quarter on quarter. Oh my God. 640% growth in earnings. 640% growth in earnings. Sales, 80% growth in earnings on sales. Their return on investment is not bad, 15%. Return on equity, again, not bad. Return on equity is not bad at 28%. But they pay no dividends. In this case, let me just explain something to you guys. We like dividends, right? But when a company pays dividends, remember, it is saying that it doesn't have a better use for the money. If Elon Musk does not pay dividends, it's because Elon is taking his dividends to invest in Tesla Berlin, Tesla China, and Tesla Austin that would make more money for the shareholder. So it's not a bad thing not to pay dividends. We just like dividends. Just make that point across to you guys. I mean, and how you then compare is that if a company does not pay you dividends, then look at their return on equity. What are they doing with that equity they have retained? If the company is not paying you dividends, but then the interest rate in the bank is higher than the company's return on equity, then the company is just wasting that money they're retaining. They should actually give it out to you. So your return on equity is how you want to use to compare that if that company retaining that dividend is doing better. In Tesla's case, 28%, which means that they're higher than inflation and all that. So we can forgive Tesla and all those companies. Yeah, Osho is saying margins would be great. Me personally, if you look at Tesla, the market cap of Tesla is more than the next 10 car companies put together. Benz, Toyota, Honda, if you combine them together, the market cap is higher for Tesla. But sales for those other cars is higher. The market is saying that Tesla is the future. The market is saying that Tesla in 10 years is going to eat up all those car companies. That's what the market is saying. Let me explain to you what Tesla is doing. All these Berlin factories they are building in Berlin, in Austin, in China, they are building what you call scale. Over time, Tesla can make an electric car cheaper than everybody. Tesla is end to end. They make their batteries, they make their cars, they make everything. They have a gigafactory in Nevada for batteries and all that, end to end. So they can make their cars cheaper than anyone. Right now, you can see their margins are lower or higher, but long term, the market looks long term. Long term, Tesla's cars, the cost of making a Tesla car is going to be cheaper. For you to build an electronic car company, you have to start from scratch. That's what Volkswagen found out, right? You just can't go to a factory and just plug and play and build electric cars. You have to start from scratch. So Tesla is building a monster that will be difficult to follow. Obi has a few questions. Obi, how are you doing? Welcome.
Hi, hello.
How's it going?
Can you hear me?
Yes, we can. Sorry, we got sucked into the investment. I and Osage. Sorry.
Okay, so my question, I'm actually just curious. I have two stockbroking firms that I use, and one of them actually gives me a weekly analysis of how my portfolio is doing, but the other one I don't even have a view of it. But yes, I've been using the Excel spreadsheets, like a couple of people have been doing as well. Most people do as well. So Yochaa is really like the game changer because it helps to give you all your portfolios in one place. Even though I also have the CSCS, I subscribe to CSCS platform. They have an online platform where you can integrate all the different stockbroking firms, or every shares you have into their platform, and then you pay for it. You pay for it, I think maybe up to 2 years or 3 years. I'm not sure thereabouts. But anyway, so I just wanted to find out: is this free? The subscription, is it free? Can people just sign up and continue to use it? Are there different levels to the usage? So if you have to get access to certain features, for example, you then have to pay a token or a subscription fee.
So right now, everything on your Yochaa is free. If you open a brokerage account and you're going to trade, you have to pay brokerage fees and all of that. But in terms of most of the features we've spoken about today, there's no charge for the application. So it's like you get the 3 portfolios, you have a maximum of 30 stocks you can have in your feed to restrictions. In future, we might have premium features. If maybe people wanted to have more trackers or they wanted to be able to have but right now we don't have that model because I like to listen to users and see what they're interested in. So at the moment it's just free. When we talk about creating an account in Yochaa, what we mean is just signing up with an email address, and you only need that for the tracker, because the way the tracker works is that if you were to delete the app or something happened to your phone or you got a new phone, once you sign in, everything is retrieved from our servers. So that's the only reason why you need your email for that. But if you just downloaded the app right now and you just wanted to use the heat map and browse prices, you don't even need to create an account with an email. You can just use it like that.
Okay, thank you very much. So, so right now you're saying there's no subscription, but are you looking at monetizing it in the near future?
So this is really early days for us, and a lot of these things will be determined by what users are asking for. So the model we have, as you have seen, right, is slightly different from what other brokerage apps are doing, because for us, we're creating a community where investors can come and be able to meet up, and you have access to tools that make it easy for you to know what's happening in the market. Now, eventually, maybe we'll get to a stage where people will want more complex charts, like maybe they want technical analysis and all of that, and then maybe if we got to that stage, we could start creating premium features. But for now, we really don't have to do that.
I requested to talk on this.
Okay, hold on, please.
I don't think I can hear you.
Please, can you hold on, please?
Okay.
Yeah, thank you. Okay, so thank you. I think you've answered the next question. Like, correct me. I was going to ask if there's a maximum number of stocks you can add. I think you said 30.
Yeah. Okay. So on the tracker, there is no maximum.
Okay.
It's only on the heat map that you have.
Okay, then 30.
Yeah. Yeah, but on the tracker, you will add more than 200 if you wanted to.
Okay.
Yeah.
Okay. So when users for the platform, what would you see are the most important metrics that they should look out for?
Are you asking me a question?
No, not you, Bashir, not you. Please mute your mic when it's your turn. You will be called upon to speak.
Okay, thank you very much.
Thank you.
Sorry, can you come back with the previous question?
Okay, so I was asking that for users on the app, what would be the most important metrics that you would ask them to look out for? What are the most important metrics that they should take consideration on the app?
Yeah, I think it really depends on the user because people have different interests, right? So as an example, we have a heat map for dividends. So there are a lot of people who are really interested in that. They want to see, okay, in an instant, which companies are paying best dividends in Nigeria. But then there are people who are more interested in prices, historical prices, and those guys are looking at the heat maps. And then there are other people who just want a place where they can track their stocks and they pay more attention to the tracker. Now, one part that we realize is growing quite quickly is the Yochaa lounge, where we just come together and ask questions. It's almost like a community for sharing information. So people come and they say, okay, how should I go about this? They ask questions, all types of questions, like what are the best platforms I could use for investing in Nigeria right now? And because it's an agnostic platform, people talk about people from the different apps competing for that competing platform actually use Yochaa, and they have conversations and they learn from other people, they get insights. So that's one part that is going quite quickly. I mean, it's a liquid channel for US stocks. So I think that way most people spend their time at this in the last few weeks. That's what we've noticed.
Okay, thank you very much. So again, to you, it's based on what your own objective is. Individual objective determines what areas, what metrics to focus on, right?
That is correct. Yeah.
Okay, thank you very much. Okay, I think that's it from me. Bashir, if you can hear me, please unmute your mic and go ahead with your question or comment. Bashir. Hello, Bashir, can you hear me? If you can hear me, please unmute your mic and go ahead with your question or comment.
He's still there. Maybe he's trying to log in. I do have some questions, but we could give a second for Bash and all that. All right, super. So, I mean, Osage, believe it or not, we spent about an hour, 35 minutes here already, right?
I just noticed that now.
Yeah, so we're nearly winding down. So today's also Champions League and all that. So we do get it.
Oh my goodness, that is true.
So yeah, I mean, yeah. So Carl, thanks for sending that back to us. Really do appreciate it and all that. So someone is also asking me, okay, this is about the dollar money market. Yeah, that's the FCMB dollar money market. So I've sent that message to them. And I have a gentleman here. He says he's a student. He wants me to market his disinfectant. So Toby, if you have a flyer, right, or what you do, send it to me. I'll forward it. Only just send it to me. I'll forward it. Yeah. So let's go back to the discussion. So Osage, in terms of Nigeria, right? In terms of investing in Nigeria, are you looking at anything to do now with, say, the second tier folks? These are not the guys that are listed. Is there any intention to do something else for the Nigerian space, even if it's, say, with cooperatives or savings, or to do this underserved segment, the second tier for market of the Nigerian stock exchange? Is there any indication that you guys might look there, or is just a bridge too far in terms of regulation and all that for you guys?
Yeah, for now it's not in view right now. Okay, let me rephrase that. These are things we've thought about, but as you have noticed, right, we have quite a lot of factors and things, challenges to overcome at different levels from a technology point of view. Because once like easy access, one of the challenges we face is like availability of APIs that would make it easy to pull information or make it easy to trade. So until we go past some of those hurdles, it's difficult to include them in the platform. So something like dividends, for instance, like we do have comprehensive dividend information, but most of it is pulled manually from different sources, which you can imagine is a painful process. Whereas we're doing the same thing for US stocks, it's just there. You have APIs, you make a payment to the data provider, and you have access, uninterrupted access. So I think that that's the challenges we face in the Nigerian space.
Yeah. Let me also ask you also a question. Is it how hard would it be to build an app or interface where if I use Yochaa, right, I could connect my dividends to that app and then the dividends could be automatically bought? Like I'm saying, how hard is it to build a drip? How hard? I mean, if I get dividends, it goes to the bank, then I can tell the bank to buy it, doing it on my app. So the interface is, I'm looking at just the interface on my end, but the bank end is going to the bank and the bank is writing to the stockbroker and the stockbroker is buying it back. Is this something that is feasible really for us to pursue? And like fintech doing that?
It's feasible, right? But the problem is that there are too many parties you have to speak to for this to happen. Because the moment you provide a feature, users expect it to just be available across board. So if you were to do something like that for MTN, let's say you spoke to everyone in the pipeline such that this happens for MTN stocks. People come to your platform and it's not happening for Zenith. You're going to get so many one-star reviews because even though you're providing something, it's not complete as far as they're concerned. And you have so many registrars. So this would normally should happen at the registrar level. But if you think about it, we have 15 to 20 registrars. So it now means at these registrars, we think about the dividend forms, for instance. We try to automate that process so that it doesn't have to fill it. So every form, every registrar is completely different. So you can imagine just the forms are different. Now, if you provide a technology solution, you now have a situation where you have to connect to different APIs, you have to do 20 different technologies. So those are the challenges. So technically it's possible, but it's just the way the space is structured. In some areas, there's no uniform way to do things. And that just makes it complex and not practical.
I hear you. So super point. All right, so we're just going to start to wind down, guys. Been here 45, talked about this great app from Osage has built. I use it. I think it's wonderful, allowing us to more or less track what we're doing. This first guy to basically sign in here was at DBC, but I think he was off. So David, I want to apologize if I kept you waiting for long. And thanks for doing that. So let me just start to wind this down, right? Osage. I personally think, like I give you my story, I learned most of what I know at the very beginning from just interfacing with that bootleg app that I bought years ago, even before I go into university. Most of the concepts you pick is just looking at the numbers. You see that, if you do this, this happens. If you do that, this happens, right? So I am very, very particular about you tracking your transactions. If you're a trader, you need to track every trade, why you did it, what happened. And people actually keep journals because you want to go back and see what has worked for you. What was the price? What was the return when you did this? So it's always good to have a way to track what you are doing. Very, very important. Long-term investor, you want to know your historical costing to know if you're making a return investment, right? You want to get that down. Also, even for tax purposes, right? If you are buying many shares, you can say, because if you buy and sell shares in the US, you are going to be taxed on long-term gains and short-term gains. You are taxed more if you sell your shares after a short time than if you hold your shares for a longer term. So you want to say, okay, if I'm buying shares and I'm going to trade them, they're going to be in bucket one. So I can track my short-term exposure to the IRS. Bucket two is going to be my longer-term portfolio, which means I'm not going to sell them within 1 year. So these are practical uses you can use for that tracking, not just for you to buy and sell, also for the management side. And that's the point I want to bring out in today's space, is that record keeping is almost as important as you buying, selling, and trading. And I think we'll try to do that today, and I think it's worked out. So, Sagi, do you have any closing remarks you want to make? Obi, then I'm going to take Obi, and then we're just going to thank everyone for tuning and listening. Sagi, let's have you go, right?
So I think the closing remark means to just say thank you to for life. It's just been a beautiful opportunity to have a space on your platform, to be able to tell everyone here what we do. And for everyone who was just staying with us this evening, I really appreciate your time, because over an hour is quite a long time. Over an hour. Very long time. So I really appreciate your time, and I hope in Yochaa so that the product is inspired by love for Nigeria, basically. And we do believe there's a lot of potential in the financial industry in Nigeria, and all that potential we realize with people bringing into the space and an opportunity for people to build wealth, which I think is important. It's something that we didn't have that for gets the job with Shell. And we thought the bigger the salary, the richer you realize that the salary goes up, your lifestyle adjusts, and then after 50, you don't have, even though you're very rich, when you were getting high salary. So I think just having a platform where people can start to have this awareness and understand that wealth creation is something you can learn. I think it's useful. So thank you for your time, and I hope we can all achieve this dream and goal for Nigeria.
Excellent. Yeah, nice one. Nice comments there. Obi, what's up? Do you want to say hi? You want to tell us what you're going to do late for your weekend and all, and then we can maybe try to copy you and what you got planned for Sunday and all? Yeah.
Well, okay. Well, first of all, thanks to Osage and thanks.
Yeah.
I would say you guys are really doing a good job. I think this is something that is really essential for especially people who are investing in stocks. Is really that this is actually very important to have the Yochaa app. And most importantly, not just having the app, but understanding how you can create wealth and also manage it, which is the most important thing. I remember an article that you shared about the Vanderbilt family.
Yeah.
And of course, tying this back to that, it's not just about creating the wealth, but knowing how to manage it such that it's outlives you. If you, of course, just what every one of us wants to happen. So at the end of the day, yes, I'll say thank you again. Thank you to Osage and team for giving us insight into how the app works, what the features are. I think, of course, certainly I'll be downloading it. Even my husband was here saying, "Oh yeah, that certainly he's going to be downloading the app." So yes, we already have some people who are downloading the app just from us.
Great.
So that's thank you so much. No problem. That's right. Of course, I would of course be touting the whole. Definitely have to preach this gospel to my friends who are also investing in stocks to let them know the essence of this and why they should have it. So yeah, thanks to everyone who joined. Thanks for staying tuned and till the end of the session with us, and for always making our time to join us every Saturday evening. Thank you very much, and hope you enjoy your weekend. Well, the rest of the weekend. For mine, it's going to be a pretty restful day tomorrow. 1 or 2 meetings, but to be a pretty restful day.
Is it August already? Is it August meeting? Is it August meeting already that you're going for meetings?
August meeting is so far. Don't worry. I'm people married to Yoruba, so we don't do August meeting for you.
Oh, is that the excuse? Okay, no worry. Tell him I said hello, right? That one of these days we'll talk and I'll say hello. I do appreciate it.
Thank you so much, Kalu. Thank you, everyone. Hope you have a good weekend and enjoy the rest of the weekend. Please stay safe. Tobe, I see you. You're laughing, right? You can hear me today. Hallelujah.
Yeah, we've got, and so guys, just to set it up, we're bringing back Tobe. We're going to have Tobe next week talking about, we're going to go through the second part of the book. Tobe was assuming we could do the whole book. It wasn't possible. So we're going to come back next week and we're going to try to focus on, say, investing or other topics in the book. Let's talk about my money, which is the book I wrote. Very, very good. So, I mean, it's also time for us to see the facts behind the figures, why we wrote the book, why we wrote that chapter, and what lesson we're trying to pass along. So Tobe and I are going to be here next week. So do make a date. The first one was wonderful, right? So just try and make sure you join as well. These sessions are always saved on Twitter for 30 days, but always post on the podcast forever. So once this is over, I'm going to do the recording and post it up, and then you have it. All that remains for me to thank everyone that listened in: Oshin, Diron, Akogo, Shego, Starlord, Izoma, OG, Kolawole, Emmanuel, Euro, all of you guys that tuned in. I do appreciate all of you for joining and staying so late with us on a Saturday. We know you had other things to do, but you stayed with us. So I appreciate you, Stan, and all. Thank you so much. So guys, I'm going to shut down the space. All right. Thanks Osage for also being a great guest and for giving us all that insight. All right, guys. So we're going to shut it down. You guys keep it safe. Keep it safe. Timing in the market is better than timing the market. So time in the market is better than timing the market. How long you stay affects your returns, guys. I'll see you guys next week with Tobe and shutting down the group in 5, 4, 3, 2,